The NASDAQ, about 17% a year since 2011. Okay, so the NASDAQ, because it's a secular technology trend, outperforms. Makes sense. And then you've got the Bitcoin, which is 150%. Gold actually doesn't beat it. Gold's about 8 or 7. So you're actually worse off in gold than you are owning the S&P 500, which is why that ratio keeps moving. So Bitcoin makes such a dramatic difference. So all I started doing was then dividing every chart by the total global liquidity, or even the Fed balance sheet, or M2, whichever you want to use, right? And you found that the S&P goes sideways, gold goes sideways, real estate goes sideways, roughly. The NASDAQ goes up, and Bitcoin does that. Okay, so now you've got two assets, only two assets in the world that outperform the debasement. Tech stocks, we get it. Tomorrow is more digital than today. Of course they're going to do well over time. And second is Bitcoin. So you divide one by the other, and the NASDAQ's down 99.97% versus Bitcoin. And once you see it like that, and you realize it's all driven by one cycle, which is one dominant factor of debasement, then it makes it really easy, which is just own the one asset that outperforms.
Yeah.
And because they're all correlated. And risk adjusted, it's by far the most superior asset we've ever been given on a risk adjusted basis.
Cryptocurrency experts are highlighting Bitcoin's resilience, noting that it just recorded its second highest close since the recent market crash 3 weeks ago. Despite this, the Bitcoin price remained relatively stable, although market emotions were mixed. Bear traps have been active, and many bulls seem to have forgotten what it's like to be at the top. Experts are highlighting the importance of the 50% retracement level at $61,500. This is a crucial point that Bitcoin must cross in order to regain a bullish outlook. While there are still downside risks with support levels potentially around $55,900 and $49,100, current market sentiment suggests that Bitcoin could be primed for a significant bullish move. They discuss the broader economic context, pointing to heightened fears of a recession as Bitcoin and stock markets have fallen. This fear sparked panic selling by retail investors, a classic dumb money move. Meanwhile, institutional investors took advantage of falling prices by buying on the dip. They highlight the importance of market sentiment indicators such as the Fear and Greed Index and Bitcoin search trends on Google. These indicators suggest that the market could be approaching a bottom, paving the way for a potential rally. The stock market has seen a strong rally. The S&P 500 and NASDAQ recently posted significant gains. Pazino references Gann's analysis, suggesting that after several days of gains, a pause or correction in the market is likely. Despite this, the overall trend remains positive, with the possibility of new all-time highs. While Bitcoin remains a key focus, major altcoins choose Ethereum and Solana. Solana is known for its fast blockchain and expanding DApp ecosystem. Its ability to handle high-speed transactions at low cost makes it a strong contender in the smart contract space. Despite some past technical issues, Solana's active developer community and new projects could boost its value in the near future. The future of the cryptocurrency market is optimistic. It is believed that the next Bitcoin rally could spark renewed interest and FOMO among retail investors, which could lead to significant price gains. He advises traders to monitor this potential breakout while being wary of weaker altcoins that may face challenges in the current market environment. According to Raoul Pal, if you want to become ultra-rich, then go with Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
If you remember, go back prior to 2008, we'd have these long periods of no recession, short periods, and it was variable. But suddenly it's like a metronome, as you say. I'm like, what's that all about? And eventually it led me to realize that 2008, I think, was the Great Reset. The one that people keep expecting happened. What they did is they basically they told everybody they could forego paying interest on all their debts, which was zero interest rates. And then they tried the new trick of printing money via quantitative easing. Now, what that did is allow every single major government in the world to refinance all of their debts on this 3 to 5 year sector. And then all the asset prices are all correlated. Whether it's tech, whether it's Bitcoin, whether it's the economy itself, it's all driven by the same cycle, which happens to be the presidential election cycle, which happens to be the Bitcoin halving cycle. It's all the same thing.
Raoul Pal has dumped Bitcoin and other altcoins and moved 90% of his liquid assets into Solana. He doesn't own much Bitcoin at the moment. This doesn't mean he doesn't like Bitcoin. Others are up more. It's just that simple. Solana's impressive market performance supports Pal's bullish outlook. Solana is up about 75% year to date, outperforming Bitcoin and Ethereum's gains of 58% and 42% respectively. He also compared Solana's user experience to Apple's ecosystem, highlighting its elegant design and efficient closed system, though he said Ethereum was much broader and much more open in terms of other things that can be built on top of it. Franklin Templeton has also backed Solana, sparking speculation about the Solana ETF. Solana has shown great adoption and continues to mature, overcoming growing technological challenges and highlighting the potential of high-performing monolithic architectures. As the cryptocurrency market experiences a surge in the second half of July, analysts are optimistic about certain altcoins and Solana in particular. Some experts estimate that Solana's market cap will reach $100 billion by the end of August 2024. Raoul Pal predicted that the macroeconomic and cryptographic summer had already begun as part of his everything code thesis. Pal's thesis explains market movements due to macroeconomic influences driven by liquidity, which he says bottomed out in late 2022. He said that the macroeconomic summer and fall are all related to increased liquidity, and that liquidity is expected to increase until the end of 2025. During this period, assets such as tech stocks and cryptocurrencies are expected to perform well. Pal noted that the crypto summer has begun and is fully unfolding after the halving. It's the same everything code cycle. He added that the biggest play is the alt season or the banana zone, likely referring to the massive gains and parabolic price charts of some altcoins. Pal's everything code thesis argues that current asset prices are primarily determined by monetary policies and central bank debt levels, rather than traditional business fundamentals or economic growth. Pal noted that since 2008, major economies have synchronized their debt rollover cycles, creating a predictable 4-year pattern aligned with the U.S. presidential election and the Bitcoin halving cycle. This synchronization arises from central banks' efforts to prevent systematic collapse by continuously depreciating currencies and rolling over debt. Pal estimates the depreciation of global currencies at around 8% annually, which he describes as paying for an 8% put option so the whole system doesn't collapse. Pal sees Bitcoin as the most notable asset, while the S&P 500 is barely keeping pace with the depreciation with 12% annual returns. Bitcoin has averaged 150% annual gains since 2011. Once you look at it like that, it makes it easier, which is to say, it's enough to own the one asset that's outperforming expectations. It will take about 6 years before artificial intelligence and robotics fundamentally transform the economy in ways we cannot comprehend. His advice is to make as much money as possible before this paradigm shift. Pal rejects predictions of an imminent stock market crash, saying central banks cannot allow it due to systemic risks. Instead, he predicts that continued currency depreciation will lead to asset inflation, with transformative technologies such as AI, robotics, and blockchain creating a renaissance of innovation and increased productivity. It will be a renaissance. We will change the way humans live. Pal also says that in the not-too-distant future, AI agents will likely use digital assets to pay for things like electricity, and transactions will fall outside of traditional financial systems. AI could bring an unprecedented rate of innovation to cryptocurrencies within a few years.